Mark Konyn, he's from RCM. He's the Asian Chief Executive. I think you are, aren't you, Mark? Yeah.
I still am. I was this morning.
Right. Oh, my God, I nearly fell over. What are you making of this? And, you know, how far is that jobs report responsible for the rally we're seeing?
Well, certainly the jobs report late on Friday will be encouragement for Asian investors. Plus, in the middle of the week, you had better manufacturing news out of both the US and China. And that together is going to compound, give investors a little bit of a lift at a time when they are looking for clues, because once again, investors are concerned about the double-dip recession in the United States.
Why are investors so fickle right now? You know, what are they looking at in particular? And you have the skittishness. Is it down to silly season in August as well, partly?
Well, you could put it down to that, but I think more fundamentally we are seeing some rather wild swings in inventory and inventory cycles. It's not like a normal recovery. We saw restocking earlier in the year, and now we're seeing a bit of destocking. Inventory levels are not alarmingly high or alarmingly low, but they constant fluctuation is giving false signals. So I think many forecasters and analysts are finding it very difficult to get a handle on the situation, and therefore we're seeing that recovery through late June, July in this part of the world, and then pausing through August, the sell-off again, and now we're waiting for more data. No data coming out this week, so it's all eyes on the central banks, which are meeting this week, and maybe we'll get some clues about possible stimulus.
Right, so where do we go from here? I mean, what are you looking at, and what are you telling your clients right now? And on the buy side, of course, you've got to be a little bit more sceptical, I suppose.
Yeah, you've got to be a little bit more considered, a little bit more long-term. But I think some markets in this region, surprisingly, have done well this year. We've seen the smaller markets in the southern part of the region, you know, the Philippines, Thailand, Indonesia, Malaysia, really leading the region in terms of performance. And these are markets which haven't figured highly in allocations for international investors. So they've done well. They're likely to attract a little bit more in terms of asset allocation.
The trouble is, if you miss the boat if you try and get in them now.
Well, it's been absolutely right. It's been local investors that have benefited mostly. You may have missed the majority of the move, but I think that's still going to attract assets. In more recent weeks, we've seen emerging markets continue to attract assets, though Asia actually has seen an outflow. Right.
We have to look at China when we're talking about what's going on here. And, you know, what's the story there right now? And Chinese market has definitely underperformed everybody else. I mean, do you dip a toe in there?
Well, you talk about fickleness amongst investors. China is the prime example. Finishing last year, everyone enthusiastic. This year's been a disaster. International investors have really shunned that market, and it's still the case. At the beginning of the year, fearing overheating, now fearing excessive slowing. So we've seen...
When you talk about excessive slowing, we're talking about growth rates of 8.5%. There's been a slowdown. I mean,
last year, and this current quarter is still 10%. Absolutely right. But the worry is that it will slow too sharply. We don't believe that. We think we've now turned the corner and bottomed out in terms of inflation. The tightening that we've seen in China is not going to be reversed. But when it does, that's going to be the signal for investors to come back in. And given that investors are so far underway, it could be a significant move.
Mark, how are you going to know, though? How are you going to know?
Well, we're looking at guidance on second-half earnings. I think that's going to be the first signal. So watch those guidance numbers very, very carefully. Of course, they always come with a health warning. So that's the first stage. And then we're looking, certainly, in the inflation number. We're looking at bank lending. We're looking at liquidity.
I keep on banging on about this, but, you know, the inflation number, do you buy into it? I mean, it doesn't take into account anything, really. But
well, I think you don't perhaps buy into the absolute level, but what you're looking at is direction and movement.
A cup of coffee in Beijing, I mean, that's not exactly cheap, is it?
Where you and I buy coffee is not where most people buy coffee, as we know. So it's really about some of the fundamentals within the economy that's driving food prices, that's driving prices in general. And we think that has now stabilised.
And with that in mind, I mean, you know, things being expensive there, I mean, it raises questions about the yuan, doesn't it, as well? And yes. You've seen what's been happening. Would you say that this move by a lot of banks in Hong Kong towards settlement in renminbi is one step down that very long journey?
Well, I think this liberalisation is working on a number of levels and a number of fronts. One, of course, is coming away from the US dollar peg, and we've got, you know, Larry Summers up there trying to placate the situation and push back the political rhetoric from Washington a little bit. And at the same time, you're looking at the internationalisation of the RMB, with Hong Kong really being in the centre for that. And we believe that's a very, very positive move, not least for Hong Kong-based banks, where the deposit base in Hong Kong is really likely to grow quite quickly over the next 5 years.
Where it may not be just one step down that long journey to flexibility or full flexibility for the Chinese currency, what about it representing the journey down towards the Hong Kong dollar's peg to the US dollar peg coming to an end?
Well, no one wants an abrupt shift. I think what we're going to see is de facto more and more savings in Hong Kong are going to gradually shift to RMB base. And as that occurs, de facto will be moving more towards an RMB movement within the economy. So away from the dollar, more towards the RMB.
Of course, that is if the Chinese economy keeps on growing in a straight line, and as we know, nothing does.
Never grows in a straight line.
No, nothing does, but, you know, there's got to be some kinks there, haven't there, at some stage?
Well, there are certainly concerns. I mean, it's still very, very sensitive to the external sector. The sovereign debt crisis in Europe has been a big blow to the recovery in China, and it's working its way through those issues.
Mark, great to have you on the programme.
Thank you.
Mark Konyn there joining us. He's the Chief Executive of RCM